Tavi Costa, Gold Bull for Treasury Secretary. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Gold Bull for Treasury Secretary. Liberty and Finance, November 26, 2024. In a recent appearance on Liberty and Finance, investment strategist Tavi Costa delivered insight into the potential implications of Scott Bessent's appointment as Treasury Secretary under Donald Trump. While initial reactions from the markets have been mixed, with skepticism surrounding Bessent's credentials and his bullish stance on gold, Costa argues the negative sentiment may misinterpret the broader macroeconomic shifts that could unfold from this pivotal appointment. Scott Bessent is no stranger to the financial world, having built a reputation through his previous role as Chief Investment Officer for George Soros. His track record shows a keen understanding of global economic dynamics, which Costa views as a considerable asset during a time of uncertainty. While the markets reacted cautiously to the news of Bessent's pick, with some market commentators expressing doubt about his market strategies, Costa believes that this skepticism may overlook the strategic implications Bessent's policies could have on the gold market and the U.S. economy at large. Bessent's recent bullish position on gold positions it as his largest investment, which Costa sees as a significant statement amidst growing economic concerns. In recent years, gold has often been perceived as a safe haven, particularly in times of financial instability and inflationary pressures. Costa contends that Bessent's bullish outlook could potentially lead to a reevaluation of gold's role in both investment portfolios and broader monetary policies. Investors currently overlooking Bessent's stance may find themselves unprepared for a substantial shift in market sentiment, especially if Bessent were to implement strategies that might encourage further investment in gold. Beyond gold, Costa underscores the potential for Bessent's policies to catalyze a realignment of the global monetary system. In the backdrop of rising debt levels and unprecedented monetary easing, Bessent's approach could spell a reassessment of the US dollar's position as the world's reserve currency. Costa highlights concerns regarding US dollar devaluation, an eventuality that could arise from continued fiscal and monetary expansion. Bessent's policy maneuvers, especially if pursued aggressively, could contribute to a significant shift in how the dollar is perceived globally. Moreover, Costa emphasizes that Bessent's appointment coincides with a notable shift in the geopolitical landscape, as nations like China and Russia work towards alternatives to the US dollar. Bessent's leadership could either facilitate the US's response to these challenges or inadvertently accelerate the decline of dollar supremacy. His policies may not only affect the US economy but also influence global trade dynamics, prompting countries to reevaluate their currency dependencies. In conclusion, while the market's initial skepticism surrounding Scott Bessent's appointment as Treasury Secretary warrants consideration, Tavi Costa's analysis presents a compelling case for a more nuanced understanding of its implications. Bessent's bullish sentiment toward gold, combined with the potential for a reconfiguration of fiscal and monetary policies, suggests a transformative time ahead. As stakeholders continue to monitor developments, Costa's insights remind us that the true impact of Bessent's stewardship may be far-reaching, extending well beyond the confines of the Treasury and into the future of global finance. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Source: Dinar Recaps.